A Roman soldier stationed in Syria around the 1st century could spend his wages on Chinese silk, fabric woven on the other side of the known world by people he would never meet, in a language no one in his garrison spoke. He didn't know where it came from. His commander didn't either. But somebody did. And that somebody had already figured out how to move money across 7,000 kilometers without carrying a single coin. The Silk Road gets remembered for what it carried in saddlebags. What it actually built was invisible, and we still use it every day. This is Money Origins, the channel that traces every financial system we take for granted back to the moment someone first needed it badly enough to invent it. Worth saying up front, this video covers historical financial systems and trade practices. Nothing here is financial advice. By the end of this, you won't just know what merchants traded on the Silk Road. You'll understand why a camel caravan in Central Asia is the direct ancestor of your bank account, your exchange rate app, and the entire idea that money can travel without physically moving. And there's one group of merchants, almost nobody talks about them, who figured out something so sophisticated that it wouldn't be formally reinvented in Europe for another 6 centuries. Picture the Silk Road not as a single highway, but as a circulatory system. Blood flows in both directions. It carries different things depending on which way it's moving. From the east, Chinese silk, porcelain, and eventually, paper money. The Tang Dynasty was issuing paper certificates of deposit as early as the 7th century. Merchants called them feiqian, flying money. The name tells you everything. You deposit copper coins in one city, and your certificate flies to another city where you collect the equivalent. No coins moving through bandits' territory. No weight on the camel's back. From the west, Roman silver. Denarii and later Byzantine solidi moved east in enormous quantities, paying for luxury goods that the Roman elite demanded and couldn't produce at home. Roman coins have been found in hoards across India, Central Asia, and China. The flow was so persistent that some Roman writers complained it was draining the empire's silver reserves. They weren't wrong. From the Islamic world, moving in both directions, the gold dinar. After the 7th century Arab expansion unified a vast corridor of the trade route under a single currency system, the dinar became the closest thing the ancient world had to a reserve currency. Stable, widely recognized, accepted from Spain to Samarkand. 3 monetary systems, 1 road, and the immediate, practical problem that nobody talks about. How do you actually price anything when every transaction involves converting between paper, silver, and gold in a marketplace where the parties don't share a language? That problem needed a solution, and the solution was banking. The Sogdians. If you don't know that name, you're not alone. They barely survive in the historical record, and no Sogdian state exists today. But between roughly the 4th and 9th century CE, Sogdian merchants from the region around modern Uzbekistan and Tajikistan dominated Silk Road trade the way that a handful of fintech companies dominate digital payments right now. They built networks, not roads, networks. Sogdian merchant families established colonies in every major trading city from Persia to China. Each colony was both a trading post and a financial node. You could hand a Sogdian merchant in Samarkand a sum of money, and his cousin in Chang'an, the Tang Dynasty capital 4,000 kilometers away, would pay out the equivalent to your business partner. No coins in transit, no courier, just letters, trust, and a family network that spanned the continent. This is a letter of credit. This is correspondent banking. This is, functionally, a wire transfer, designed and operated roughly 1,000 years before the Medici family gets credited with inventing it in Renaissance Florence. The Sogdians wrote their commercial letters in a script that linguists only began deciphering in the 20th century. Some of those letters, found preserved in a watchtower in northwestern China, are business correspondence, complaints about delayed payments, requests for debt collection. One letter describes a merchant stranded in a city where the political situation had collapsed, writing home to say the money he was owed couldn't be collected and he didn't know when he'd return. Ancient exchange rates, ancient credit risk, ancient liquidity problems. The vocabulary is different. The problems are identical. Here's where it gets interesting, and where most history books stop too early. The Silk Road didn't just move goods. It created demand for financial infrastructure that didn't exist yet. Every time two merchants from different monetary systems needed to trade, someone had to calculate an exchange rate. Every time a caravan faced a journey too dangerous to carry coins, someone had to issue credit. Every time a merchant died on the road with debts outstanding, someone had to develop a legal framework for inheritance and obligation across borders. The Islamic Hawala system, still used for international money transfers today in regions where formal banking is inaccessible, evolved directly from this environment. The word Hawala means transfer or trust. The mechanism is pure Silk Road logic. A network of brokers, no physical money moving, settlements handled through long-term relationships and reputation. You could argue that Hawala is the oldest continuously operating financial network on Earth. Ancient trade routes didn't just facilitate commerce. They were the laboratory where every mechanism we associate with modern finance was first stress-tested under real conditions, with real consequences for failure. That Roman soldier spending his wages on Chinese silk didn't know he was participating in a global financial system. He just wanted something his wife had asked for. But the merchant who sold it to him had already solved foreign exchange. The broker who arranged the payment had already built cross-border credit. And the Sogdian family whose letter is now sitting in a museum archive had already written the complaint email about a delayed transaction. We didn't build global finance in the 20th century. We rebuilt it, faster, at greater scale, with computers instead of camels. But the architecture, the logic of trust, distance, credit, and conversion, that was figured out on a desert road, in a language almost no one remembers, by merchants history almost forgot. Quick note to close. The history in this video draws on well-documented archaeological and scholarly sources, but ancient economic history involves interpretation and ongoing debate. Treat this as a starting point, not the final word. If that reframes something about where our financial systems actually come from, the next video will take that feeling and flip it. We're going into one of the most deliberate attacks on a currency ever attempted. The Nazi operation that tried to destroy the British pound by flooding the market with perfect counterfeits. It's called Operation Bernhard, and the story is genuinely stranger than it sounds. That one's already up.